Welcome to ePODstemology.
Epistemology. You know what I like a lot more than materialistic things? Knowledge. What is this?
It's a podcast. Hi everyone, welcome back to ePODstemology, where we keep you entertained by hitting you with some knowledge and occasional pop culture outtakes. My guest this episode is Professor Shiro Armstrong from the Australian National University, where he is Director of the Australia-Japan Research Centre and Editor of East Asia Forum, the world's premier online platform for academic commentary on Asian political and economic affairs. 2 articles a day, absolutely free, by the best academics in the region and beyond, including yours truly. Check it out. Shiro joins me to discuss the state of play in Asia today and why everyone in the world should be paying attention. We cover the recent history of the region, the nuances of the so-called Asian miracle, and the likelihood that the emerging economies of the region, notably China, can overcome political quagmires and achieve advanced nation status. Enjoy! So, hi Shiro, welcome to ePODstemology. Thanks for coming on the show.
Thanks, Mark. Thanks for having me.
Awesome. We're talking all about Asia today. So I was hoping that you could maybe just give us a quick introduction to kind of like what's Asia about, why should we care about it, that sort of thing.
Yeah, look, when you talk about Asia, that's a pretty big issue to cover. Let me just talk about some of the facts, some of the economic scale that'll help us understand. So I think most people are aware that the global economic gravity is shifting to Asia. And we usually think of that as East Asia. So Northeast Asia, including China, Japan, Korea, and then including Southeast Asia. So Indonesia, Singapore, Vietnam, and those countries around there. But of course, we'll get to South Asia as well, India, Sri Lanka, Bangladesh, and Pakistan. But East Asia is really the center of economic dynamism. And really, you think about Japan and China, the second and third largest economies in the world. And then you've got China and India, of course, with the 2 largest populations. And it is the center of dynamism, and that has just accelerated after COVID. So East Asia especially has handled COVID really well. And you can see that China's growing rapidly out of COVID. So the crisis hit this part of the world first, spread quickly, of course, but this part of the world hit first, managed the crisis, the health and economic crises really well, and the first region to recover, really. So already Asia being home to half the world's middle class, now that's projected to be much larger going forward, given the growth is here. We've got countries that are still young in Southeast Asia and South Asia, where a lot of the growth is. So I think that's a pretty important starting point to understand. It's where already China is larger than the European Union in purchasing power parity terms, and larger than US GDP now. And so by 2030, I think conservative projections would have China at over 42 trillion US dollars for its GDP, EU at about 23, and US at about 24. So much, much larger than the European Union or the United States. So pretty big deal already.
Okay, sweet. And so like how has Asia, or if we could just focus on East Asia for a bit, I think that's sensible. So can you talk us through a bit like just the history of maybe the last 20 years or so, or maybe a bit longer if we're thinking about China, the kind of post-Deng era? How has East Asia gotten to this situation today where it's so influential and likely to be its own kind of gravity field?
Well, let's go back a little further even, because I think China and a lot of the other countries that started their sort of economic catch-up and growth later on really emulated the Japanese model. So Japan, after the Second World War, opened up its economy, committed to international trade, and procured resources on the international market, but also allowed bits of foreign investment into manufacturing especially. And so it's really specializing in comparative advantage, which was low-skilled, cheap labor, clothing, textiles. And then as you accumulate capital, technology, and you climb that value-added ladder, Japan started to produce more high-tech goods, and initially some manufacturing that wasn't high quality, but eventually autos, cars, electronics, autos and cars being the same thing, of course, and electronics, the quality increasing as they go. And so this is the same model, essentially, the export-led growth model that South Korea, Taiwan, others pursued. And then China started that process of opening up and committing to this export-led growth model and integrating into the global economy, as you say, as Deng opened China up. And so through the 80s and 90s, and then the 2000s, those 3 decades, China grew at an average of 10% a year. Such a large country in population terms, but already decent size economically, growing at 10% a year for 30 years. You compound that, that's remarkable growth that obviously wasn't going to continue, but slowed down a lot. And then you have other countries that they're not small, like Vietnam, population of 90 million, following the similar growth model and having this rapid catch-up growth. And so the hope is that India can commit to these open policies, and commit to openness, and specialize in its comparative advantage and play the whole catch-up game. But I guess there are a few issues there that we might want to come back to, including what's after the catch-up game, the rapid economic growth. You can't sustain 10% a year forever, but then also India and whether they're able to commit to that openness. So that's a pretty quick rundown of East Asian catch-up growth and where they've come from. And I've left a lot of details out, of course, but I'm happy to get stuck into any of it.
Definitely keen to come back on a lot of the details, especially around some of the things you flagged there, like climbing the value chain, the way Asia does trade integration, and that kind of institutional transformation that you need after catch-up growth, because I think those are all really important lessons from Asia for the rest of the world, and then also very important for kind of thinking about where Asia is going to go next. Maybe before we do that though, so that was a really good overview of the kind of economic history of the region. Could you give us a kind of brief rundown of the political history of the region?
Well, no, actually, I hate politics.
Yeah, that becomes a bit more complicated, I think, and it's a bit difficult to generalize across the region. But I think it's fair to say that political liberalization in East Asia has followed economic liberalization largely. So got countries like South Korea and economies like Taiwan, I should say, that did democratize really after periods of rapid growth. And there haven't been smooth transitions, but these countries have become more politically liberal. And in Southeast Asia as well, it's been a bit more of a mixed bag there. It's not easy, of course, to transition, but the big success story here is Indonesia. It's always a bit of a rocky road, and it's not perfect. These processes obviously take a long time, but Indonesia is now, since the Asian financial crisis, gone from an authoritarian state to a democracy, and one that functions reasonably well. Could, of course, improve, and a lot of reform is still needed and to strengthen its democratic institutions. But you look at Thailand, Myanmar right now, some of these countries, it's not a linear process and taking big steps backwards, and that's really tough to see. But there is a question about how sustainable this sort of economic liberalization, economic growth is, as incomes get larger, get higher, whether you can maintain those authoritarian political systems, as opposed to giving political freedom and decision-making at firm and at household level, really where the decisions need to be made, because that's where the information is at.
Yeah, it's really interesting to think about kind of what a reasonable time frame is for a democratic consolidation. So I think we sometimes take it for granted in the modern era that you could go from, as you say with Indonesia's case, a military dictatorship essentially, to a robust democracy in the space of a few decades. And then we get a bit, reasonably, but we get very perplexed almost when there's a bit of backsliding, So when Jokowi got elected, there was a lot of hope that Indonesia would consolidate its democracy quite dramatically. And I kind of think that it has, although in his second term, of course, there's been a lot more backsliding, and he's had to cut a lot more deals with oligarchs, and so we've seen a range of problems there. But maybe it's not out of the ordinary for such a young democracy. It's good to see them having peaceful transitions of power and all that sort of stuff. Maybe just to kind of help people get a better sense for this diversity in politics in Asia that you talked about, maybe we could zoom in for a little bit on your main specialty, because you're a regional expert, but your main specialty is Japan, if I'm right. Is that correct? Yeah. So and Japan's a really interesting democracy. So could you tell us a bit about the broader trajectory of Japan's democracy?
Yeah. So it is interesting thinking and talking about democracy in the region, because it's not what we're used to in quote unquote the West, say. And we've got different models in these different countries, and it's not all familiar. So Japan, freedom of press, freedom of speech, and we've got a democracy. You've got elections, of course, but the way that the politics is structured, we've basically had the one party, the Liberal Democratic Party, in power since 1955, or thereabouts, except for 2 short periods, a 3-year stretch from 2009, I think it was, and an earlier stretch in the 90s, a very brief period in the 90s. So, it looks like a one-party state, but of course the elections are fairly contested, and within the LDP, the Liberal Democratic Party, you've got different factions and different interests. So it doesn't look like a two-party state, a two-party political system. They don't have a strong opposition right now, and very rarely have one strong opposition. It's fragmented. But I think that's what we've got to look out for in Southeast Asia and Northeast Asia as China liberalizes. China, if China and when China has more political liberalization, just to recognize that it has come a long way in the past 40 years, economically and politically. Yeah. It's not going to look like a two-party state that we're used to in democracy anytime soon, but that doesn't mean there won't be a lot of political liberalization as growth continues. And I believe that they'll need to maintain economic growth and to avoid what we call this middle income trap, being stuck in sort of almost like Malaysia or Thailand, where your institutions don't improve and don't reform, and you've got these less democratic institutions that aren't congenial to high growth, high income growth. And something that's pretty interesting, you look around the world at all the high income countries, and they're all democracies, except for some city-states and some oil-rich, very small countries.
The petro-states.
So the empirical evidence would suggest that we would be on the side of political liberalization to reach that high income status. But something pretty interesting is happening just this year, where that arbitrary threshold for what is high income, as what the World Bank determines, is actually falling because of the COVID shock, and a lot of, especially high income countries, going into significant negative growth. And China's growth being rapid, there's a chance that China becomes technically a high-income country later this year. And so what will happen there is we'll have a majority of the global population that's high income living under an authoritarian regime or non-democracy. So that'll flip the empirical evidence on its head. Now, so it's a technical issue. But
yeah, well, I was going to say, speaking of kind of the empirical evidence, so how much do you trust the growth figures coming out of China?
Oh, look, sometimes it looks a bit too smooth and not enough volatility, but, look at how far China's come in the last 40 years. If you've been to Shanghai or Beijing or even any second-tier city, you can tell it's not poor. You've got a lot of the rural China still being fairly poor, but pretty much they've eradicated poverty essentially, and growth has been rapid and sustained. So I don't think the the data's perfect, but I think it's much better than a lot of people give it credit for. And I think we're talking about at the margin on, what provinces are reporting to make it look a bit smoothed, and you put growth targets in place, and that's what you get rewarded for politically. They're going to try to meet it, and that's at the expense of reform and using fiscal stimulus instead. That kind of problem you'll get. But look, the GDP numbers, there are a number of ways of verifying, and the Chinese have been pretty clear about growth slowing down and how that's a more sustainable growth rate. So I think, I don't have any issues with the Chinese data. From time to time, you see studies that correct it, but in the whole scheme of, I don't think there's much to worry about there.
Okay. Yeah, I mean, I think I broadly agree with you. I suppose I'm a bit skeptical that growth has been as solid as they say in this kind of immediate post-COVID era, just because, so I'm in the UK right now where the economy has gone out the window, but might recover reasonably thanks to this vaccine and stuff. But I mean, and there's a lot of other issues going on, like Brexit came through administratively in the midst of the lockdown. And there was, 40% crunches in exports at the border and stuff like that. So the situation here is particularly dire, and that might be clouding my reference point. But I just find it hard to believe that China can go through the intense lockdowns that it went through amidst kind of substantial institutional tightening over the last few years that I imagine has affected foreign investment and that sort of thing, and still be putting up, like, what did they report, 2.5% growth for this year? Is that the expectation?
Yeah, that was that might have been last year, Mark. I think this year.
Oh, right, higher. Okay. Well, this year I'd expect it to be higher, but I guess I would have expected them to have 1 year of close to zero or something like that. But there doesn't seem to be much of a blip.
I think they surprised on the upside. And as soon as those lockdowns ended and people started spending, including the government big time, you got what was a V-shaped recovery in China. And one indicator that this is a rapidly growing economy is the iron ore price. And we feel that here in Australia, because that's sustaining our budgets and putting a soft landing under our economy, because China's driving iron ore, Australian iron ore exports, and we're a commodity currency, and part of our export basket is just natural resources, and so the commodity price and the iron ore price is really important, and that's just skyrocketed. And that's what's kept afloat in Australia, and that's all China. And it's not reform that you want to see that furthers investment, consumption and services growth, because it's that sort of stimulus that's going into steel, making more steel, more construction. But it is one way to keep the economy afloat, while I think what they're doing is building digital infrastructure, and not just buildings and more roads, but really trying to transform their economy in that way as they recover.
Yeah, right. That's interesting, because so you do think it's kind of mostly driven by stimulus, and then I like your point about digital infrastructure. So I recall a session at the China Update, the biggest conference on China outside of China, hosted by the Australian National University annually, where Dwight Perkins from Harvard was saying, I mean, this would have been like 4 years ago now, that China doesn't need any more 12-lane highways, and that infrastructure spending is kind of really running out of productive return. So in a Keynesian sense, it's kind of a bad bet. Like, you might get some short-term returns, but you're not going to make back that money in the long run. But do you think that spending money on digital infrastructure and this kind of big bet that the Chinese government seems to be making, that it can use digital technologies to leapfrog other countries and kind of get ahead of them on the technological frontier, do you think that's a kind of viable strategy?
I don't even think it's a viable strategy. It's the best strategy for them. It is a more sustainable growth model. It's where the innovation is going to come from. You know, they shouldn't be trying to make more high-speed rail and as Dwight Perkins said, more 12-lane highways. Although you won't see 12-lane highways, and that's in Myanmar. In
Oh,
China,
right.
it's a bit more efficient than that.
I'll just
Maybe
interrupt
6
you to
lanes.
say when I was in Cambodia a few years ago, we were driving on one of these new highways. And the main thing I remember about it was that it wasn't like 6 lanes going in one direction and then next to it 6 lanes going in a different direction. It was like every 2 lanes they'd change direction. So like sometimes the minibus we were in would go across like 8 lanes. And on some of those lanes there'd be oncoming traffic like further up the road, and then all of a sudden we'd be back in traffic going in our direction. It was one of the most bizarre experiences I've had in a developing country. But I don't know if it's still like that in Myanmar.
Well, in Naypyidaw, the capital of Myanmar, it was just amazing. 12-lane highways and 3 cars. And Buffalo, and so it was quite remarkable. Clearly, not the best use of infrastructure spending, but I think China's got more high-speed rail within China than the rest of the world combined. I don't think they need too much more infrastructure. That's part of exporting the infrastructure through the Belt and Road Initiative. But they do need more, we call it digital infrastructure, I suppose. But this is where they don't need to build banks, or what do you call them? Bank branches. Don't need to build bank branches out in the sticks, or have everyone being able to access a branch. You have the digital finance now, where anyone's got a mobile phone can get credit, and that includes SMEs and new businesses, but also poorer households now have the ability to access credit through digital finance. So their tech companies, financial tech companies, have leapfrogged traditional banks, and so they haven't had to. Traditional banks are still very large, but it's a very efficient way for them to leapfrog that stage of kind of development. So I think that's a big part of it. E-commerce there is booming. A big question is how e-commerce and digital finance and all of that in China relates to the rest of the world, whether we just have completely different systems and have a decoupled digital world with China behind a great firewall, or whether there's enough shared interest between countries, including on data privacy, on data security issues that are big issues in China as well. These are all common interests that we have with the Chinese in Australia, that the Americans do too, and then talk about that in Southeast Asia and elsewhere. There's huge interest in reaping the benefits of Chinese innovation. China is one of the biggest innovators in the world now, just behind the United States. And as a small country like Australia that imports innovation, we're about 1% of global R&D spend and 1% of global innovation, depending on how you measure it. What we want to be doing is importing technology from the United States, from China, wherever it's near the technological frontier.
China, 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 China.
So what I was going to say then is that I guess the impression I get from what little contact I still have these days with kind of China watching is that there was an expectation when Xi took over that he would kind of continue sort of the liberal market reforms, certainly, but especially but as well, I guess, the kind of slow political opening of China. And instead we've seen probably backsliding, I guess I'd say, on the politics, and I guess a movement sideways on the economics. So I suppose a lot of us expected kind of deep reform of the state-owned enterprises sector and deep reform of the banking sector, particularly around like capital account opening and that sort of thing. And we haven't really seen that. But instead, we've seen this quite pronounced move on the Belt and Road, for one, which we'll come back to, I hope, and two, on this digital economy stuff. And so I guess then it becomes a matter of the CCP, broadly speaking, has taken a bet that this digital transformation and the kind of economy that comes out of that will be enough to sustain China's growth into high income, and that they won't need to do the kind of political economy reforms that I suppose a lot of us were expecting. And I think in order for us to understand that, and for our listeners to understand that, I think we should probably tackle head on this idea of institutional change and the middle income trap. So could you maybe just give us a bit of an introduction to what the middle income trap is? Like, what role do institutions play in development, and how is that catch-up period different to the middle income period?
Yeah, of course. I mean, that's a pretty big issue, and I'll get to that. But maybe just before I do, maybe to just reflect China issue and some of the issues you raised. That yes, I think China's gone backwards politically. There's been consolidation, and we've seen the ugly side of that. But I think understanding what Xi Jinping inherited from Hu Jintao and the previous administration, where corruption was rife and it was really difficult to implement anything. And that's a bit of an exaggeration, but not so much, where, you know, the PLA, the military, was difficult to control. State-owned enterprises were a power unto themselves and difficult to rein in. And there was corruption throughout the system. So you had a situation where I think rightly a lot of people were worried about China's growth grinding to a halt because the institutions were so poor and the central government had very little control over the system. That might sound strange when a lot of people think of this monolith that is China, CCP, that's got absolute control over the whole system. But I think the popularity initially of Xi Jinping's anti-corruption drive, you know, he used the sort of one tool available to him to get a grip of the system, get a hold of the entire apparatus there. Now, of course, that sort of justifies it and avoids the Latin American problem of corruption and the institutions dragging the entire economy down. But then, of course, you know, I'd be the first to admit that pretty quickly went far too far. And you let a politician like that get too much control and power and starts going after his enemies, and the sort of side effects of this anti-corruption drive, people were going after their enemies or people they disliked, and there was worry about officials being too risk averse after that, but also just the political consolidation and the effect on you know, what was growing free speech, although not free speech that we'd expect here, but fewer people speaking out. Yeah, that is a worry. And so the question is, as it's gone backwards politically, the settings are perhaps better if the government was to focus on reform, to actually implement reform. Now, there's a question about how focused they are, but also looking at the signals on SOE reform that have been state-owned enterprise reform. It's been delayed a couple of times. Big announcements have been delayed, but it's not exactly static there. It's a thriving economy, and they did sign up to this regional comprehensive economic partnership agreement that was signed up late last year, and that's a pretty big deal for East Asia. It brings some binding commitments to open economies and some rules, and it might look like a low standard, weak agreement from the European or North American perspective, but it actually has some pretty significant commitments for these countries that are, you know, range from pretty poor to pretty rich and diverse in terms of political system. And China was able to sign up and wasn't lagging in the negotiations. It's not a China-led agreement like it's often called. India wasn't able to sign on, and a lot of the provisions were watered down for countries like India, not China. And then, look, I won't bang on about this too long, but Xi Jinping did signal interest in joining the Trans-Pacific Partnership. This wasn't just a political statement to grab a headline, but the Chinese system studied this agreement pretty carefully, and the reformers in the Chinese system think that Trans-Pacific Partnership, or it's the CPTPP right now without the US in it, is a good vehicle for external pressure for reforming state-owned enterprises. And the state-owned enterprise chapter in that was written with China in mind. And the reformers in China see the TPP as a useful framework for making external commitments to push domestic reform through. And for Xi Jinping to announce that, you'd have to think there's some victories within the reformers there, and some, not to count them out yet. So I think there are a few things to look to there, including the China-EU investment agreement. But let me
hold on.
Now to
let's just do a quick interjection there. So I thought that was all really good. And when we talk about trade, I definitely want to come back to RCEP because I think it's underappreciated, as you say, by the Atlantic communities. And I think that's because they underappreciate the way trade works in Asia, and it works really well. Another thing I wanted to add to your list of like things that have gone pretty well on the economic front in China is that I think they have made pretty substantial inroads into intellectual property protections, and they're probably not satisfactory still to a lot of Western audiences, and I'm quite sympathetic to that, but I think we should also recognize that they have made progress there. And then I guess the last thing I wanted to say, and this will hopefully segue nicely into what you're about to commence on with the middle income trap, is just when you're talking about the anti-corruption purge when Xi took power, and then how that kind of maybe went sideways after a while. I remember at the time when I used to hang out a lot more with people watching China, that when Xu Yongkang went down, so he was the head of the kind of security apparatus, and considered kind of like the de facto head of the petrochemicals faction, as I understand it. That was seen to be quite a big deal from the reformers' point of view. Like, so he was considered a sort of major power broker for the obsolete industries. And that if it was the case that Xi had amassed enough power to get Xu Yongkang out of the way, then that signaled that it was kind of the path had been cleared for state-owned enterprises reform that would clear out those particularly obsolete industries in energy and that sort of thing. But then we haven't seen too much movement there, and like there's some reasons for that. The CCP thought that they couldn't just make all these workers unemployed who wouldn't be able to retrain in their like mid-50s and stuff like that. But we've also seen, just like that purge has continued, and it's gone from being an anti-corruption drive to being definitely a purge in the good old-fashioned CCP style. So anyway, I think that hopefully segues nicely into a discussion of kind of institutional reform and its role in development. So could you tell us a bit about that?
Yeah. Just a final word on China, I suppose.
Yeah.
It's a pretty big and complicated and very dynamic country, and quite often we don't have enough people knowledgeable enough on China, enough sinologists, and it hasn't helped during COVID that Chinese scholars and others haven't been able to travel abroad, and others haven't been able to travel to China. So I think it's all incumbent on us to understand China more. But moving to the middle income trap, this is a phenomenon where some people don't agree with the concept itself, but most countries that reach middle income in the last, since let's talk about the post-war period, do not reach high income. Their growth slows, and they don't transform their institutions to reach that high income. And I think there are a number of reasons for that. First of all, it's just very hard to reach the technological frontier. Yeah, it's really relatively simple. I shouldn't say really simple. A lot of countries have shown how to do quite easily, how to accelerate growth in that catch-up period where you're going from very low growth to or low incomes, I should say, to middle incomes. And I talked about the Japan case and how East Asia's emulated Japan's case, where you need a sort of pro-growth government that's interested in exports and
investment.
Investment and substitute for a well-functioning market that might do that otherwise. So it's an imperfect substitute, and there is an argument to say that that is congenial, that the government will do that instead of when you don't have the institutions or the market to allocate capital, for example, when your incomes are lower and you're still a developing country, for the government to be allocating capital imperfectly. And this is kind of industrial policy, but allocating capital to the companies that look like they're going to export, to allocate to companies that look dynamic and are larger, in the case of Japan and South Korea, and in Taiwan's case, I think it's smaller or medium-sized enterprises that got a lot of help and cheaper capital from the state. So it's really the government compensating or substituting for well-functioning institutions or financial institutions, for example. But that's across the board. So you do have very cheap labor. You have what's essentially unlimited cheap labor from the countryside that's migrating to the urban sector, or transitioning to the urban sector and urbanizing. That's great because you can specialize in that comparative advantage, which is low-skilled, low-cost labor. But then when you start to accumulate capital and investment and human capital as well, and start to produce things that are higher value add, you need much more innovation. You can't just copy what you're importing, re-engineer it and produce it and export it. You're going to have to be creating things yourself in your own country. And, still with that kind of model, you can be a fairly successful economy and society. Just it's harder to get to that high income level where you're at the technological frontier and innovating. And I think a big part of that is having institutions, financial institutions, allocate capital more efficiently. And government, there's no way that government will know how to allocate capital in a complicated economy. But also the hiring and firing decisions need to be made at the company level.
Not
those
the political
level. Yeah. So it really is a story of letting go of some of these controls that's difficult for governments to do as they transition to a higher income, or want to transition out of middle income. Letting go of some of these controls and levers that they'll have, because it's letting go of power, and also it introduces volatility, but it's that volatility that you need, and it's that decentralized decision making that you need. So this isn't a unique story I'm telling here. There are many have told this story, but you think about that in the Chinese context right now. You mentioned capital account liberalization and other controls politically have gone backwards in China. I think that the Chinese are well aware of the success stories nearby in Japan, Korea, and elsewhere, and the failures nearby as well, of Thailand, even Malaysia, that looks like it'll be high income, but their institutions are far from democratic and have a long way to go. And
they're on a nice edge, I'd say.
Yeah. So, and that's a problem where the Chinese don't want to let go of some of the controls. You open up your capital account, you're going to have to let go of your exchange rate controls, and you'll have a volatile, fluctuating exchange rate. And you introduce volatility and flexibility into the system, which is pretty scary when you're trying to maintain stability. Now, when you have a well-functioning financial market and deep financial markets and institutions that can, like an independent central bank, like proper regulatory agencies, and like we're used to in Australia and the UK and other advanced economies, that volatility acts as a shock absorber for stability. So it's quite a contradiction. And I think you'd understand that looking at the stages of growth where lower income countries will hold on to these levers and try to maintain stability in that sense. But when you get richer in your economy, especially your economy like China, it's more important globally. They're not just a price taker anymore. They can introduce a lot of stability by bringing flexibility and into some aspects of their economy, a lot of aspects of their economy, that can then act like a shock absorber. So the exchange rate can be a shock absorber in terms of relative prices nationally and domestically.
Yeah,
So,
I mean, that kind of reminds me of this anti-fragile notion that if your institutions are well established for volatility, then your economy should benefit from volatility because it, for example, clears out all your overexposed companies and all the companies that rely on access to cheap credit from their mates in the state-owned banking system, but they're not actually productive firms, that sort of thing. If you start having your capital and labor markets allocating capital and labor to their most productive uses rather than to the most politically connected uses, then you're often going to clean out a lot of those zombie firms and a lot of that dead wood, and just make sure that you're putting your best foot forward.
Exactly. And, you know, when we talk about flexibility, we're talking about letting firms go under, letting companies exit the market, and they free up valuable resources.
Yeah.
As opposed to zombie firms afloat by taxpayer money. So we want flexibility in the labour market as well. We want flexibility in the economy, but that's easier said than done. And when you don't have a social safety net, for example, you wouldn't want much flexibility in the labour market. I think the US case is a pretty important case in point, where the rapid growth in inequality and just the lack of a social safety net there, where healthcare is a big one, but you lose your job in the Rust Belt, and a lot of people are stuck there, and they're the disenfranchised, the ones that are pushing back against the establishment and against globalization. It becomes quite easy to blame international trade when it's not just trade, it's innovation and change that means people are losing jobs. I think looking at Asia again, and here I'd count Australia. I usually count Australia in East Asia because of our geography and our economic interests. We didn't suffer the same China shock that the US did, because we were able to compensate and shift workers to new jobs by and large. Japan was the same, had enough of a social safety net. The rest of East Asia that perhaps didn't have a strong, robust social safety net could afford to grow out of it. When you're growing at 6, 7%, 8% a year, you can grow out of your problems. There's industries that are booming, that people losing jobs in other industries will shift to the growing industries. So
yeah, and when you're in the low-skilled section of the value chain as well, your workers are just much more transferable. So like if you get laid off from one manufacturing job, you can reasonably easily get retrained to work in a different one. Whereas if you get laid off from your high-skilled job where you have really specialized knowledge that you've built up over, I don't know, a year of training plus 10 years of work experience, then if you do get a new job, it's going to be at a lower wage because you have to sacrifice all that human capital that's no longer relevant.
Yeah, and then if you have such disparities in education, like you do in the United States, where between the countryside and the cities, there's a big disparity in quality of education, and then the universities are given student debt. It's difficult to get into good universities as well. It just makes it much harder, I think, to for low-skilled workers who are in steel factories, steel mills, to adjust and to get new jobs. It's not easy in countries like Australia, of course, but I think you look at old mining towns here, or places that had manufacturing that disappeared, Geelong and Newcastle. There's been huge reinventions of those places to more services driven, and that's not easy to do if you're not educating people, and still people are going to miss out. People are going to be long-term unemployed, and those people need to be supported somehow. They're not to be ignored.
It's really a hard policy problem. We actually have a episode of the ePODstemology podcast coming up quite soon on dealing with losers and how to kind of compensate people who are displaced by economic transition. I think that's going to be particularly relevant to the climate-related transformation in industries. So I'd like to bring us back to this institutional discussion about how, in the low-income period, you've got institutions that are fundamentally about creating stability and ensuring that you can get a return on your capital. So, just establishing property rights, establishing contract law, and then just making it possible for capital to go after industries like energy, construction, and then, all the manufacturing stuff that you talked about. So we always see like garments as one of the first industries to take off in countries like Cambodia, and you attract foreign investment there and that sort of thing. But because you're essentially creating rents by protecting these industries from volatility, because we usually have kind of closure to a lot of foreign capital flows, like particularly short-term capital flows and that sort of thing, you create a very profitable opportunity there for people. And then obviously that means that there's a lot of politics involved in who has those opportunities, and that kind of enriches various vested interests. And so then in that middle income period that we're talking about, you've got to reform your institutions and kind of pry that corruption out of there, so that instead of labor and capital going to who's connected, it goes instead to who's got the best ideas and who's working the hardest and that sort of thing. And I guess one example of a part of the world, I think, where there's been a lot of difficulty getting out of the middle income trap is Latin America. So in Australia, we often make the comparison to Argentina, where I think in the 1930s or something like that, Australia and Argentina had exactly the same level of GDP. But now it's just kind of night and day, in part because Argentina is just stuck in this kind of middle income boondoggle where it's flip-flops between left and right-wing governments that really just kind of do corruption with different people in charge. And there's not kind of genuine reform. So my question to you then is, what are some of the kind of key political dimensions of that reform? So why is it so hard to get those institutional changes done? What are some of those major institutional changes? And then I want to lead into a question about how trade agreements and that sort of thing can help push through reforms.
Yeah, good questions. And just on Argentina and Australia, you're right. It was the 1900s, and Australia and Argentina were the two richest countries in the world per capita GDP.
Yeah.
Of course, Australia wasn't counting its indigenous population in that. So that's a bit of a difference there. But it was about the institutions that when we make use of our natural resources in Australia and Argentina, it is the rents that were being concentrated in political power in Argentina, whereas we had more democratic institutions in Australia that at least had much more buy-in from the population and would spread the benefits more. I think that's the rough story, and you can see the growth trajectory of both countries resulting from that. And that is exactly as you say, the right comparison, because it's hard to get out of the middle income trap, and you do have vested interests, as you said, but you also have government as a vested interest.
Oh yeah, absolutely.
And what kind of reforms do you need? You need the government to let go of a lot of those levers, the government to let go of political power.
The 9 most terrifying words in the English language are, "I'm from the government and I'm here to help."
And that's not easy to do. It took a massive economic crisis in Indonesia for that to shift. It shifted rapidly and shifted in the right way. But in other countries, the vested interests are not willing to give up their political power, political or economic power.
Yeah, I mean, in Argentina, they've got rolling macroeconomic crises, and it never seems to provoke a change. It's more just like, like the left wing will come in and be profligate on monetary policy, and then the right wing will come in and be unnecessarily austere on it. There doesn't seem to be any recognition that maybe you just need the government to not be in charge of monetary policy.
But then, it's very difficult to just suddenly impose US or other Western institutions on this country, which is the mistake, I think, in Latin America quite often, and part of the mistake of what I think they were trying to do in Eastern Europe with big
shock therapy.
Shock therapy. it really is a slow process where it has to be driven from within the country. And this is where you can have best practice institutions internationally to look to, but there's no point having independent monetary policy if you don't have a floating exchange rate. You don't have all sorts of other initial settings. So Australia floated its exchange rate and had an independent central bank, in the 80s, and then independent central bank later. But that required a lot of preconditions of being able to regulate the financial market, to have financial market properly set up and institutions to do so. So you're spot on, you're right. It's just these, I think, transformations are really, and this is why so many countries are stuck in the middle income. There's unlike going from poor to middle income, which is relatively easy, the template's there. A lot of middle income to high income is very country specific, institution specific. And so you look at the countries that have succeeded, like Japan, like Korea, they've transformed dramatically, but not in the way that perhaps we would have thought. And there haven't been smooth transitions by any means. In Japan, that massive asset bubble burst in the early 1990s, and then stagnation, and it reached high income, and it's one of the most advanced economies in the world, but per capita GDP hasn't kept up with the technological frontier. It hasn't managed to continue reform, and it's got huge labour market rigidities and problems around its fiscal debt, and reached the zero lower bound decades before the rest of the world did in monetary policy terms.
High income traps are a thing, right? Because that reform issue just keeps going, and any big wave of structural reforms is going to empower a new wave of vested interests. So like in Australia, when we got rid of the farming lobby and the manufacturing lobby in the 80s, that just kind of empowered the banking lobby and the real estate lobby and the mining lobby. And now those are the three vested interests that we have to battle, and they've been really blocking systemic reforms for at least 10 years, if not longer.
Yeah, exactly. It's an interesting and different story across the world, but these middle income, high income arbitrary thresholds and this idea of a middle income trap, I think, is just a nice way to conceptually separate countries out into different growth phases. So you may not agree with the thresholds and the cutoffs, which are relatively arbitrary, but it is an interesting and useful way to think about it, because really all we're talking about essentially is how far away you are from the technological frontier. So you talk about a high income trap. It is, as the world changes and the technological frontier continues to expand out, it is reform and transformation so that you can maintain your position, you can stay at the technological frontier. And that's not easy.
So how have countries in Asia historically used trade agreements as a tool to push forward and pursue those kind of deep reforms that we've been talking about?
Yeah, so it's a good question. I think Asia has, in the past, taken a very different approach to the rest of the world. And here I'll talk about East Asia, because that's the sort of the integrating part of Asia that has got the rapid growth and has had, been the center of these supply chains or regional value chains. And that really wasn't through trade agreements that we know, like the European Common Border Free Trade Agreement, or in the North American Free Trade Agreement, NAFTA, where you have these binding commitments between countries legally enforced, but there were more cooperative arrangements in Asia. So countries getting together in forums like APEC or the ASEAN grouping to just continually talk and build trust and confidence and understanding that if we all work together towards free and open trade and investment, it's not only beneficial for ourselves, but beneficial for our neighbors as well. So we had what was called concerted unilateral liberalization. It was built on consensus, on peer pressure, leading by example, not on legally binding commitments. And that
Yeah.
was really 80s, 90s, and even 2000s, how most of the region unilaterally opened up their economies, and include China largely. Its unilateral liberalization leading up to WTO entry in 2001 was remarkable. Average tariffs falling from over 50% down to 10% in the space of 15 years, all unilaterally. So that required huge transformation behind the border, of course, when you're lowering these tariffs at the border barriers. Now that sort of mode of liberalization has stalled, because it doesn't have to just be liberalization, it should be unilateral reform.
Yeah.
Now, when you do it together, concerted unilateralism, you not only benefit yourself, but those benefits are compounded by your neighbors opening up as well. So you've got expanded markets in close proximity. But the reform efforts, it becomes harder. It's behind the border. Your tariffs are already quite low. By all means, they should continue, and they have continued in a lot of countries. But countries have been using these free trade agreements or regional agreements to lock in reforms, lock in liberalization and reform, but also as external pressure. So I mentioned that a couple of times in the Chinese context, but the Chinese, I think, do this strategically. It's a good example. South Korea did as well, but using free trade agreements or entry to WTO or international treaties, essentially, where you're giving up a bit of sovereignty and the kind of sovereignty you do want to give up to put up trade barriers in exchange for what is in their own interest, to external pressure, external impetus to open up your economy further or to commit to reforms. So I think it's a useful way to use the global system and external leverage for reform, but I only think it's sustainable if it's a sort of homegrown reform push. If you try to just rely on foreign pressure to continue reform, you're going to have a pretty big domestic backlash, I think.
Is this a knockoff? This is a knockoff, isn't it? Some cheesy knockoff. This is exactly what happens when you sign these free trade agreements.
Yeah, you still have to do the hard yards at home and convince the public, convince the community that this is why we're going into this agreement. It'll make us all better off. And I think that's where it helps to, it's not always easy to communicate. We're going to have pain now, and in particular industries, for gain over time and across the whole country, across the whole community.
Yeah.
So that's the difficulty of reform effort. And when you're opening up protected industries, they're the ones that are going to suffer. And you see the long unemployment queues, or factory workers losing their jobs. And that's pain that's concentrated in time and space. It happens now, and it happens to a few industries, whereas the benefits come spread over time and space. They come later and across the economy. So you want to have a reform effort that recognizes that communicates that can compensate for that. And I think the impetus for those reforms being trade agreements is fine, but I just don't think it's sustainable unless you're convincing your community and you can see the growth benefits.
Yeah, that's such an important point, right? And I think that's really one of the great lessons of the 20th century. So the World Bank, I mean, all the themes that we've been talking about around institutional reform, economic reform, how you push trade liberalization, were really kind of the errors that we learned from the World Bank structural adjustment period, which I think still kind of scars and mars a lot of thinking about these kind of issues in the public discourse. So the structural adjustment loans were, as you know, but just for people listening along, in the 1980s, particularly in Latin America and Africa, there were a lot of countries that needed bailouts from the IMF and the World Bank. If you don't see the World Bank and the IMF as particularly evil in this arrangement, what you see is that they need to ensure to the people that fund them that these loans would be repaid. And the best thinking at the time was that in order to ensure that, you needed to reform the recipient economies. So there were these kind of very strong conditions placed on bailouts that countries would remove tariff barriers, liberalize financial sectors, end wage fixing, end price controls and subsidies, and all sorts of other policies that were embedded in these networks of corruption and patronage that we've been talking about with the middle income trap. And basically, I think most people would agree that structural adjustments were kind of a failure. Like, they don't seem to have had any real effect on the growth of these economies in the long term. They often precipitated further crises because the political groups that were disempowered by structural adjustment loans organized to get angry about them, and they often led to they didn't have the economic benefits that they were expected to have in many cases, because the US and the EU's export markets remained closed to a lot of these countries because you know what you were talking about with this kind of long-term consensus building, unilateral liberalization, kind of we're all in this together, it's good for all of us. That didn't really exist in the Atlantic. And so you still can't really export like your beef and your cereals and stuff into the EU market. So it was just a bit of a disaster. Whereas the approach that you were outlining there of really convincing your domestic population and ensuring that, you know, there was enough reward in liberalization to compensate losers and empower new wealth is so important.
Yeah, and just on the structural adjustment packages, you don't need to look too far in this region beyond the Asian financial crisis and the mess that the IMF and Washington made in Indonesia and other countries too, but completely exacerbating the crisis, the economic crisis, forcing these countries into austerity. And then 10 years later in the global financial crisis, sort of question, well, you know, the US seemed to do exactly the opposite to what they were demanding East Asian countries do. And maybe the best part of that story, the most generous part of that story, might be that the policymakers in Washington learnt the lessons from East Asia. But it's, of course, it was very different when you're applying these policies to yourself.
Yeah, that's right.
Country the other side. So, you know, the IMF is still a taboo subject in Indonesia. It's seen as the institution that made more people unemployed and you know, caused the crisis to be deeper and longer than it needed to be.
All right, man. Well, let's wrap up this amazing conversation. Very broad, wide-ranging. I want to finish with one question that hopefully we can get a reasonably succinct answer to, which is just kind of where do you see Asia in 20 years from now? What will be kind of some of the defining features?
Yeah, some of the defining features for 20 years from now will be whether South Asia, India being the major power in South Asia, but of course Pakistan and others, can sort of emulate the East Asian growth model to an extent. And by that, I don't mean copy everything, but given the circumstances, you know, open up their economies, even to themselves. India and Pakistan still don't recognize each other's economies in terms of giving them most favored status. You know, so there's a huge opportunity there in South Asia. So that'll be the new growth center for East Asia and for the globe if they can get on that path of rapid catch-up growth, and then, you know, middle income and hopefully beyond. But also, I think, like we've talked about, watching how institutions in East Asia change, whether they're in China, Vietnam, Thailand, or any of these countries. I think those two factors for me, South Asia's growth model and East Asia's institutional change, are going to determine whether this part of the world is going to be large and middle income or humongous and rich.
Yeah, nice.
And that's, I guess, to simplify it, yeah. So a lot's at stake, of course, and the current growth trajectory and the current trajectory is fine, but I don't think we should be settling for fine when there are so many challenges to do with, you know, still poverty in the region, climate, and how we can better protect the environment and make our growth models more sustainable. And that's much easier if we're growing and if we're more prosperous.
Yeah, nice, man. All right. Well, thanks very much. That was a great conclusion to a fantastic talk. I hope it was fun
that was
for
a bit
you.
of fun.
Yeah, great. Thanks for coming on ePODstemology, and look forward to further chats in the future.
Thanks, Mark. Take care, man.